Hello, good day trader. My name is Wasku Smart FX. Welcome to my YouTube channel. So today is a continuation of our series that we have been working on, which is called the institutional market structure. But for today, we're having a subtopic which is called the higher time frame mapped to a lower time frame, and we're having an entering protocols. So which means that for today's lesson under the institutional market structure, we want to look at another dimensions of how we can be able to reduce our stop loss. We have been talking about the market, institutional market structure. We have been talking how you can trade on 15 minutes, how you can trade on 1 hour. But this kind of things will actually give us a big stop loss and like 50, like 40, so we want to reduce this stop loss to be able to trade good with a little stop loss, but we have to refine what we have seen, the institutional market patterns or market structure we have seen on our higher time frame. We want to reframe it down to a lower time frame. So that is the objective of today's lesson. Okay, before we continue, okay, I would like I know everybody watching this video, this is episode 7. So I know everybody watching this episode 7 must have watched episode 1, 2, 3, 4, 5, 6. So if you have watched episode 1 to 6, then you must have known how the pattern look like. So for today now, I will not be going to the pattern anymore. I will just be doing what we call the reframe to a lower time frame. So before I continue, this is gold 4-hour chart. I'll be looking at this gold 4-hour chart. So this market was bullish, but before it was bullish, I saw why market has to be bullish. So let me put my annotations. Okay, this is my annotations there. I was expecting when market was around this zone, I was expecting markets to buy around this zone. Okay, let me show you on my Telegram channel. Okay, you can see it here. I was expecting markets to be a buyer at institutional support zone. This is a support zone that I've seen for market has been consolidating at that spot. Market has been making a lot of reversal at that spot. So I was expecting market to retrace back into it, then give us a big bullish. So you have to first understand the ideology behind it, that we saw something on higher time frame. So the real sense behind this trade is that I saw something on higher time frame. I saw why I have to be a buyer at higher time frame 4-hour chart. Do you understand? So I hope that is even the step 1 of using institutional market structure. You have to first see something that will give you a confident levels. You have to make sure that your confidence level is actually high, so we can be of 95%. You have to make sure that you are confident about what you are doing. I hope you understand. So which means that we saw something on higher time frame and we know that there is high possibility that market is bullish. High possibility that market is bullish at that zone. So, but because market want to get to the zone and be bullish, does not make me to be a buyer at that particular zone. So that is why I will reframe it down to 1 hour. Let's continue. So at this zone, at this particular video series, today's topic we are doing, my 1 hour will be the higher time frame now. So which means that what you have been doing on the institutional market structure is that 4 hours is the higher time frame, 1 hour is the structure found, or 15-minute structure found. So which means that it is 2 of them. 1 hour or 15 minutes is for the entry, but today 1 hour will be the higher time frame, 15 minutes and 5 minutes will be the entry zone, entry time frame. So let's continue. So now let's draw a box at this zone here. So at this zone, that was I was expecting bullish. So we want to see what transpired there, what make us a buyer, what do we see on the lower time frame that actually triggered us and like, oh, now we have to be a buyer. So let's let's go to 1 hour chart. Okay, this is my 1 hour chart here. Before I put on the annotations, um okay, so before I put on the annotations, is there something, we have done this thing. This is episode 7, for crying out loud. We have done all these things. We have known how to find the pattern, the institutional market pattern. It is called the institutional market full step. That is the way they reverse. That is the way they retrace. That is the way they we know the ends to a retracement. That is their full step. That is where they move, mostly on gold and JPP odd. That is where they move. They want to put an end to a retracement. You can look at the chart here now. Market break the structure and market was retracing down. And if you are just a retail trader without knowing the full step of the market maker, you'll be like, oh, this is a liquidity zone. Oh, market should come from buy side liquidity to the sell side liquidity. The market should come down and take the liquidity. But that is not the ideology behind it. If you look at this chart here, this is where we are looking out on 4 hours to be about. Okay, let me put on the annotations. Yeah, so you can see it here. This is the particular zone we are looking for market to retrace. Let me put it out. Now, this is a zone where it enters into the 4 hours POI. This particular zone here, market enter into the 4 hours POI. But because market enter into the 4 hour POI, does not make me a buyer. So I have to see something that will convince me to be a buyer. So that is what we are trying to do on this YouTube channel, on this series we are doing. It is called the institutional market structure. It is also called the institutional market full step. That is the way they take their step to end a trend. Okay, this is bearish, right? Market was bearish. So for you to know when the trend comes to an end, you have to make sure that you understand their full step. You have to make sure that you understand how they move, how they end. So you can do that. I've backtested this a whole lot of times. I have showed you how it works live and live. I have showed you how it works. I have showed you that it works. So I've come again to show you that it works again. But this time around, I just want to show you in another dimension where we can reduce our stop loss. I've been showing you where you can just trade it. Wait, if it's like this now, I can trade this alone like this, 1 hour. This is my pattern. But I will have a likelihood of higher stop loss. So that is not the reason why I said, okay, let us reframe it down. Okay, now if you see this now, you can see market was bearish, market bearish, then at this zone market went up, then okay, now you can see market trades up, the market comes down. Then when market comes to this place, it shows that market is inside the 4 hours POI. So in my own ideology or in my own reasoning, I'll be reasoning that market should be a buyer. Market should buy so massively. So we are expecting buy, right? So market should buy massively. So according to our market institutional structure or institutional market structure that we have been learning, we have a low here, we have a low here, we have a low here. So which means that market is bearish. We know market is bearish. We have a low, we have a low, we have a low, a lower low, lower low, lower low. Then immediately market moves up. It did not break this structure. So which means that we are expecting another lower low. But don't forget, this zone here is the 4 hours POI. It enters into the 4 hour POI where I was expecting a buy. The market, this low here did not go to the lower low, which will take us to a continuation of bearishness. But instead, it reverses and breaks the structure. So does that implies to you that this is a complete segment of our institutional market structure full step? So which means that this complete segment of our institutional market structure that we are teaching about now, episode 7. So which means that if you do not know about, if you cannot see it in this zone here, you cannot see the institutional market structure or the institutional market full step, then you have to go back to episode 1, episode 2 to watch it again so that you can be seeing it and make sure you are trading it, not just seeing it. You have to trade it also. The more you trade it, the more it becomes you. So the real objective is that it becomes you. So that is the real objective. So let me put on the annotations now. So this is the annotations. Let me cancel this. Let me remove this. So you can see this is it here. We're having short time low, intermediate time low, and short time low. So let me show you on my 4 hours chart. On this, let me show you on my Telegram channel on this 1 hour where I was spotting it out. So you can see it here. I saw everything where led. No, I'm not just teaching you this because I'm doing playback. I'm doing playback. I'm just doing playback to show you that this thing. No. I'm telling you things that work. It's not about showing playback stuff like that. I'm telling you things that work. I'm telling you how it works. These are the things I saw live. But because I just want to teach you because this is a market footstep. This is how market reverses. The major patterns or the major reason of this market structure that we have been teaching, the institutional one, is that we can be able to know the end of a trend. So when market is being very bearish, okay, you don't need to stress yourself much trying to pull inside a market that you don't understand. Okay, why is it bearish? You don't need to. Why is bearish does not concern you? Okay, you know market may be retracing, but you have to be a sniper. You have to stage yourself. You have to stage yourself very well so that when market ends that bearishness, you know that the next thing to do is to be bullish. Or even if it is not a big first, but at least market makers will go bullish. They can't just be going very till the whole ends. They have to go bullish too also. It can be of retracement, it can be of any other thing to take out liquidity, to close down a fair value gap. They are going to go bullish again. So that is why the market maker footstep is actually needed. It will let you to know when they want to end the old market patterns, the old market trends, and go to another trend. So yeah, you can be able to participate in the new trend. So you can see it here. I saw this thing live. Short time low, intermediate time low, short time low. This is the old pattern I have been teaching from episode 1 to episode 6. And now today, episode 7, this is the old pattern. Just this one pattern, just this one. Follow the whole step. You are going to see this and you are going to make money. At least it may not be a whole day, it may not be a whole day. It may just be once in a week. You are fine. So this is it here. I saw this thing live. I was even telling for my Telegram channel. Oh, this is the institutional market structure I have been teaching on my YouTube channel. So this is it here. You guys can be a buyer at this Zoom. Okay, let's assume that I just don't want to like teach us something else. I want to trade this old stuff. Okay, if I put my entry here, my stop loss below here, and I wired up my take profit, that is almost 500 pips. If I reduce it 3 something pips, but look at the stop loss. The stop loss will be what? 80 pips. So that is what we want to reduce today. How we can be able to reduce it so that we not just enter a trade on 1 hour chart. Actually, if you enter a trade like this, you have the money, you have the everything to enter this trade, and like the stop loss is not your issue. You actually have a bigger gain. You actually have a bigger gain. That is almost 400 pips. 400 because you understand a market maker full step. You understand how they works. You understand how they moves. Because you understand it, you are going to gain a 400 plus pips. That you can also even increase it to the liquidity zone. That's 520 pips. Just because you know how they move. So today now that is not my objective for today. I'm just trying to show you that this thing works. So the objective for today is okay, we have found this like this and we know the market wants to buy 90%. The 10% is that market can do anything they like. Nobody is the master of the market. So that's the 10%. That's why I'm leaving out the 10%. But the 90% is that we saw the footstep and we have backtested it for years, and now market is doing it again. So according to what I teach, you can look at the fair value gap, you can look at the other blocks. So you have both fair value gap and order block. So I was looking at this order block here. The market should come and be a buyer. So you can see it here. I was looking at the order block. Market should come and be a buyer. So let's at this zone here I want to be a buyer, right? When market go to the order blocks or fair value gap. So let us put a this thing here so that we can see this zone on lower time frame. That's where I want to be a buyer from. That little zone. This zone I want to be a buyer from. So let's go to 15 minutes. Now the main objective is just to reduce our stop loss. So this is the whole patterns on 1 hour chart. So this is the zone we drew down, like we were trying to look for buys. So the main objective is that what happened on a higher time frame is that same scenario I am looking for on a lower time frame to be a buyer. That same scenario, the institutional market structure is the same scenario I am looking for. I'm not looking for any other thing. So that's the same thing that happens on higher time frame. That is why it's called higher time frame map to a lower time frame entry protocols. So which means that I am only working on the same patterns. I am not changing patterns. What I saw on the higher time frame, I have to see the same thing on the lower time frame. That is what we are doing. So that is why I called it refine it. We find the same pattern to a lower time frame. I'm going to look for it there. It will surely come. So you can see market was bearish at this particular zone. So which means that you're having this low, right? You're having this low, and market this low traded up here, then the reverse. It didn't take out this high. So which means that I was expecting a continuation of bearishness, right? So but market did not, this low did not come back to this low. So a market goes up. So what does that imply to you? It implies to me that you're having a short time low here at this particular zone. A short time low is at this particular zone. I'm having a short time low here also at this zone here. And the least of it, then the last of it is that I'm having a intermediate time low. So that is the three pattern for the market to stay. That is how it works. So at this zone here is where we have our what? We have our market structure shifts. It's shifted. Okay, you can see, oh, how is it shifted? You can see market break the high. I don't want market to break the high. If market is going to be bearish, then why is market breaking the high? So and now the first thing is that you have to spot out the fair value gap. So I spot out the fair value gap. So that is why we're having that trade here. So that is why we're having that trade here. So I spot out the fair value gap. I was going to retrace back into the fair value gap, then I'm be a buyer. Don't forget, if you are going to trade it on higher time frame, it will be what? It will be 80 pips for that matter. 80. So we are trying to look for a way to reduce it. So whereby, let me draw something out now. If this is 1 hour chart, this is the pattern, right? So this is the pattern. This is the whole structure we are looking for. So if this is all structure we are looking for, this is 1 hour chart. Then what I want to do is that at this zone that I want to be an entry here, this is the entry point, right? Short time low, intermediate time low. Let me zoom it out. Short time low, intermediate time low, short time low. The market break the structure here. Then I'm expecting a bullish, right? So that is that same zone that we'll be looking at. This same zone that is here is what we'll now be looking out on a lower time frame. I want to see the ideology of this video is that I want to see what these same patterns that I saw on the higher time frame, that I want to be a buyer, that give me a big stop loss. Now I want to see the same scenario to occur inside this red zone. So which means that if I go down to a 5 minute or 15 minute zone, I want to see something like this also. I want to see something like this also, so that I can now reduce my stop loss. So which means that what I saw on the higher time frame that I could not enter because of stop loss. So I want to see the same thing. So which means that So which means that everything that occurs there, everything that occurs there, so which means that this smaller zone that is there must be the whole zone that is there. Do you understand? So that is the ideology. Let's go back to the videos. Okay, let me delete all this. Okay, this is it here. This is the fair value gap. I was expecting market to change to the fair value gap, then you can be a buyer. Okay, so 1 to 2. Don't forget the list is 1 to 2, but you can do something to yourself. Just refine what is on the higher time frame, refine it to here. You can make a lot of big money. So like, okay, now this is 1 to 2 on a lower time frame. I'm losing now from 80. Now I have reduced it to what, to 30 pips, to 30 pips. So I'm losing 30 pips now, not more 80. So now let me show you on my Telegram. I think we traded it on Tuesday. Yeah, so I think we traded it on Tuesday. Okay, this is it. This is it. So I hope you can see the short time low, intermediate time low, short time low. You can see the fair value gap. I was expecting a buy from the fair value gap. Okay, I was expecting a buy from the fair value gap, and you can see gold buy limits entry. Okay, let me show you when it's the TP. So this is how when it's the TP. So this is how I was just expecting market. I was not doing much, but you can do something to yourself. Go to 1 hour back. Go to 1 hour chart back. On that same spot, on that same spot. Okay. So the 1 hour chart now. Now that same spot. Now look for your 1 to 2. That will be 170 pips. Now 170 pips that you're supposed to take before. Now you are taking it with a lower stop loss. With a lower stop loss. 30 pips to take 210 pips. So you see how crazy it was. So that is how it look like. And I actually trade the whole big trade also. That's on my VIP. I actually take the whole big ones. So which means that it was on Wednesday. Yeah. So I actually take the whole big trade also, like the bigger one. This is she's short time low, intermediate time low, short time low. Like I actually take the one that is big, 140 pips. I take the one that is big also, and I take the one that is small. Which means I took the two together, so because I can have more profit in myself. So that is it. Thank you for watching the video. Like and share. Don't forget to subscribe to the channel so you can encourage the team, Wasp Smart FS team, to do more of videos and to help the community, help us to grow more and more. So like, share and subscribe to every gold trader that you know that is trading gold. And the important thing, if you want to join the Telegram channel, there's a link in the bio or there's a link in the description. Just click on the link and you join. It is free. So thank you very, very much.